bribery and corruption, predicate crimes to money laundering. Money laundering is a criminal activity performed by criminals or related individuals or groups. The purpose is to hide and transfer the funds generated through illegal means, using the country's financial system. Money laundering risks must be identified and assessed to prevent such risks. Laundering of corruption proceeds can take a variety of forms, and the most prevalent forms of proceeds are those arising from bribe-taking or kickbacks, extortion, self-dealing, and embezzlement from the country's treasury by a wide variety of corrupt means. Criminals transfer their illegal funds from one place to another through the use of a country's financial system, such as banking channels. The transfer of illegal money may be to support other criminals in various other jurisdictions or countries. Money laundering activities are considered fraudulent and illegal activities. Different types of organizations are exposed to money laundering risks, such as banks, payment service providers, money transfer organizations, real estate, stock market, etc. Money laundering is the process of concealing the actual source of black or illegally obtained money. This process enables the criminal to enjoy profits without revealing the actual source of income or funds. Money laundering funds may come from insider trading, bribery, computer fraud schemes, illegal product sales, smuggling, and other organized crimes. The identification and assessment of such risks enable the prevention of such risks. Money laundering risks may be identified during the investigation of the transactions, which are highlighted due to the trigger of red flags. Red flags must be triggered on any unusual and irregular transaction or activity for review and investigation, considering the risk of money laundering by the existing customer or any other person. Money laundering risks are considered by reviewing the customer's existing profile to whom the particular transaction or activity relates. During the performance of transaction monitoring, according to the defined transaction monitoring policies, controls, and procedures, the MLRO must consider the updated and current profile of the customer while assessing the risks of money laundering in the transaction or activity, highlighted through the red alert mechanism. Money laundering risks are assessed considering the trend of transactions and activities of the customer, about the changes in the business activities or landscape mentioned in the customer's risk profile. ABC officer, or MLRO, must investigate the respective transactions and make inquiries of the customers and persons involved. During the monitoring and investigation process, the MLRO may consult with the lawyer regarding the possibility of money laundering related to a particular customer, considering the confidentiality and compliance with applicable laws and regulations. Further, appropriate negative media searches play an important part in the overall money laundering investigation. Bribery and corruption activities may lead to the risk of money laundering and terrorist financing. Therefore, organizations must ensure that all such activities are identified and monitored to avoid the risk of occurrence of money laundering and related activities. As bribery means the offering, promising, giving, accepting, or soliciting of an advantage as an inducement for an action that is illegal, unethical, or a breach of trust. Therefore, these activities may be used to launder the money by the criminal groups. The organization's employees may be used as part of the criminal activity, which may involve receiving cash and cash equivalents, gifts, entertainment, travel, fees, commissions, kickbacks, discounts, rebates, contractual rights or interest, etc. Corruption involves private gain and may be committed by public officials who abuse the authority of their public office for personal gain, which interferes with democracy and the rule of law. Corruption activities may be performed to launder the money by the criminals and may be committed by private individuals who abuse their position for personal gain, which can hinder fair market operations and distort competition. The facilitation payments are made to a foreign official to expedite or secure routine government action. Facilitation payments are a type of bribe made to a foreign official to expedite or secure routine government action. While in some countries they are customary, in others they are improper. Consistent with the aims of anti-bribery and anti-corruption laws, including the FCPA and the UK Bribery Act, organizations are required to prohibit direct and indirect payments of anything of value to obtain or retain business, or to secure any improper advantages. Under the FCPA, it is a narrowly defined term that refers to a certain small expediting or grease payments that, while not illegal, must be properly controlled and recorded on a company's books. Facilitating payments are illegal under the laws of most countries around the world. In keeping with this compliance policy with all applicable laws, the organization must not permit facilitating payments. If an employee receives a request for facilitating payment, the employee should decline to make it. It is not permissible to make such payments in the course of the employee's work for the organization, even if that employee bears the cost of such payments personally and does not seek reimbursement.